Joseph Wang, I was saying, wow, wouldn't it be great to have someone here the day before the Fed that used to work on a desk there? And
Hey, d-
I go, and anyway, I knew you were coming, but it's great to have you back again, Joseph. And okay, let's start with your expectations. I do get your free stuff, and I think the headline was implied that there wasn't going to be the kind of easing that the market's expecting after today. Was it too much, too soon? Was that the headline on it?
oh, hey, well, first off, can you guys hear me?
Yeah, got you, buddy.
Okay, perfect. Thanks so much for having me. It's great
Great
to
to
be
have you.
here. And of course, today is just the day before Fed Day. We saw that newly sworn in Governor Myron is there, so we can expect him to kind of try to push some downward pressure on rates. I think tomorrow's there's going to be a mark to market with what the Fed is saying and what the market expects. And the market is pricing in a very, very aggressive easing path, and not just this year. So pricing in about 75 basis points of cutting, but pricing in a lot more next year as well. So much so that the market is thinking maybe by the end of December next year, we'll be a little bit below 3% on the Fed funds rate. Now, this is a really, really big disconnect
Okay.
with what the Fed was signaling just a couple months ago in June. In June, the Fed was signaling that, let's say in December next year, we're going to have some cuts, but let's say maybe we stay around 3.5, 3.6 instead. So there's about 75 basis point difference between what the market is pricing uh, and what the Fed signaled in June for where rates would be next December. And the market is pricing this aggressive cuts because it's looking at the employment data and thinking that the
Right.
Fed is going to just panic and start cutting. So but if you look at what the data has been saying for the past few months, the market is correct that the labor market has been disappointing. We've all seen the low job prints on the NFP report, but inflation data has also been disappointing. So if you take a step back, you'll see that inflation has basically been stuck at about 3%, basically for the entire year. And honestly, there's no path for it to come down. If you look at inflation swaps in the 1 year segment, it's saying that inflation is going to stay around here just for the next 12 months. So the Fed is at a place where both of its mandates, inflation worsening, employment worsening, but still broadly actually evolving in line with its forecasts. So this is not a
Hmm.
time where they can afford to go all in on the labor market. That inflation is still constraining. So my expectation next of tomorrow is, of course, 25 basis points. Everyone knows that. But I think in their dot plot forecast, it's going to be not too different from what we saw in June. And so I think that might prompt them to market to be a little bit less dovish in its expectation. So that might be a little bit of uh,
Disappointment for the
yeah,
for risk.
I think it'll be a little bit of disappointment for all the trades that have really run on the expectation that the Fed would just be cutting massively. And I just don't think that makes sense just yet, given that the inflation is not doing well. In the labor market, it's not well, but it hasn't broken yet, right? We're still at 4.3% unemployment rate. It's getting worse, but it's not yet broken.
Okay. So that's a contrarian view from what a lot of people are saying. So do you think, and we're already getting inklings with the retail sales, I know everyone's looking continuously every day for, people have targets in the Dixie of 95. Is there a chance that with what you're saying, we could get some type of recovery in the dollar?
I think we should get a bounce the dollar with what we're with tomorrow. Again, I
Yeah,
think it's a counter trend move. I think the broader
right.
structure move is still a weaker dollar, but
Okay.
I think the market has just really gone ahead and priced in way more cuts than the Powell Fed is willing to give. Now, in the future, we could have, some kind of Trump Fed, and that at that point in time, I think things would be different. But this week, though, it's still very much the Powell Fed, and we got Governor Cook going back there. So Trump was not able to remove her just yet. So
Right.
for this week, at least.
So we have a floor at 4% in the 10-year, and can we make a move up?
I
There are
think we
some,
move up.
yeah, move up because a lot of technicians are calling this. completed for a triangle, which implies, you know, back up towards the highs. That's probably pretty aggressive. You're middle of the road that, we're not going to see rates collapse, but could the big surprise be that the Fed goes a quarter and 10-year yields start to move up dramatically again?
So what the way that I'm looking at this now, so we are in a 3% inflation world. We've been there for the past year. I think we're going to be there for the foreseeable future. If inflation is 3%, it really doesn't make any sense to be buying the 10-year at 4%. So I think this is mispriced. Um, I don't think so. The way that I think about this is that it's not so much about whether or not the Fed is cutting when it shouldn't be. It's the path of policy that it's going to project, and it's going to project a more hawkish policy than what the market is pricing in, and I think that will put upward pressure on the 10-year.
Okay. Um, gold, you were long gold a long time ago,
Yeah,
Joseph.
I've been massively long gold. It's been a great trade. I have lightened up significantly on that. I think that again, just thinking that what will happen tomorrow, we could have a small pullback, and if we do, I
You're
would buy
buying
that
it.
dip. Yeah,
All right, maybe back to prior highs. That'd be a natural. 3,500, get a
I'd love
$100
that. If
break.
that would happen, I would buy more.
Okay. And let's get to the S&Ps now. So I know, I also, Joseph, sometimes I watch your weekly stuff, on YouTube. And I know you were talking about the early stages of a mania in AI. And, it's been, even that semis have been bifurcated. You have Broadcom higher, but we haven't seen a new high in NVIDIA for about 2 months. Is that still your bias that we're in the early stages of people starting to recognize the bubble in AI?
So we're definitely in a bubble in AI. I think there's no doubt about it. Everyone who is in this sphere also will tell you that yes, there's a bubble, but what people differ on is just where are we in this bubble? I mean, if
Right,
you're bullish, you would say that we were in the early stages. I was listening
right.
to this guy on Bloomberg this morning. He was actually, a big tech guy, and he's like, "Yeah, we're definitely in a bubble, but maybe this could go on for 5 years." So
Yeah,
I don't know where we are, but I do think that we are in a bubble, and when I think that when you're in this kind of state, it's an emotional thing, right? So, it can go higher than you can ever believe, like in the tech
yeah,
bubble and the dot-com bubble, no high
yeah.
was too high. But it's all psychological. There isn't any metrics or anything like that to look to. So I think it's I just don't know where we are. And then I think it's becoming clear to me that this AI stuff, it's not progress is stalling, and we're probably those companies don't really have a path for profitability, at least with the current economics. But people still buy that stuff, so I don't know.
Okay. Yeah, it's been a pretty tough environment selling rallies here. I know I've tried it a few times. You could tell you're the wrong way when you have to really sweat for 10 handles in the S&Ps.
Oh,
And,
absolutely, I
and
feel that
yeah,
pain.
yeah, and then it rallies 30 in a heartbeat. So, but if someone came to you, Joseph, said, I have 100 grand in cash, um, how would you deploy it? And would you keep it in cash until, people think it's illegal to not rotate into another sector? Is it okay? Is cash okay at this point in time that people are they ever going to start thinking about the return of capital instead of ROI, return on capital?
I mean, this all depends on your horizon and your risk tolerance, but I mean, I would
Yeah.
just put it in gold because I think that we
Okay.
have a lot of things happening in the world, that this is
Yeah.
a real sustainable trend. And I would expect, one day, I don't know when, hopefully sooner than later, the bubble deflates. I think that would actually be initially, I think that would actually be risk off for gold because
Yeah.
I'm observing that gold, silver, Nasdaq, this is seeing they're all moving the same tune. So,
Yeah.
I'm worried that there's a lot of people who just kind of are
It,
just
it,
levered in on this trade. And so, if the stock market were to tank, I'm afraid that they would also have to liquidate their gold. So there could be that happening. But uh, eventually, though, should the stock market falter, we're probably going to go into a recession, and I think that will prompt more rate cuts, and that would be positive for gold. So
okay.
eventually, I would expect gold and the equity markets to diverge. Although right now, just looking at the price action the past few weeks,
Yeah.
it's
Few
like the same
years.
people.
I mean,
Uh,
really, you could go back years. They both have rallied together. It really hasn't, gold has
no,
not been a,
no. Well, listen,
yeah,
look at April. Look at April, right? Gold did fine in April, really well, but the equities not so much.
yeah, gold came off like you were saying in April. It wasn't much, that's for
Yeah,
sure. Okay. So 100 grand is in gold. And you
yeah.
just, all right, nothing, and short the dollar?
Well, that's the same thing, right? You're
Yeah,
implicitly short the
but
dollar.
and looking for shorts in the market to try and catch what might happen.
It's been painful. I have to confess, it's been painful.
Yeah, I know. Um, I feel it because I've gone through some. So I really would. What about people that are saying the bonds have entered a bull market? We, had this big breakout last week. This was a comeback of the century. What drove this? This was the day of the rout in the gilts because of a cabinet reshuffle. And this was the first day we came in. By the end of the week, we were here, and we've gapped out of this triangle. What do you say to bond bulls right now, or
Well, bond
bears?
bulls have been doing very well the past
Yeah.
past week, right? I think it's recession trade. So we had,
Okay.
I mean, if you look at the job growth, it's been
Okay.
not good, right? So people are
Right.
thinking we're in a recession, so they're buying bonds. But at the end of
Okay.
the day, uh, we are in a world where inflation is 3% and will be probably going forward. That the current pricing in bonds don't make sense in a 3% inflation world, to me at least.
Okay. Uh, you know, Energy is starting to come to life a little bit here, Joseph. And I know sometimes you buy commodity stocks in, other countries to take advantage of
Yeah.
dollar declines. Are you doing anything in the energy patch? Uh,
Yeah, I own some of the so part of my
USO?
for no for income I own things like
Oh,
PBR or I
okay.
believe it or the one in EC I believe it's the Colombian oil company. They just have I mean they're get some commodity exposure, you get good yield, and
Yeah.
they're also in some country diversification as well. So
Okay. And anything new as far as what your offerings are?
no,
You
no,
know,
just
still teaching the central banking
yeah.
101?
Yeah, I'm actually
Uh,
going to write a new addition to that since it's been 5 years. I'm going to update it with what's happened the past few years, add some new material and all that. Hopefully, it'll come out sometime early next year.
okay. Um, Biggest conviction trade is obviously gold, buy breaks in gold, and that's really the only market you're interested in being long.
I think that's what I think. I feel
Okay.
most strongly of. Again, I think that we're going to get a pullback because we should get a pullback. We have the Fed coming. I think that, but like I said, I personally would buy that dip.
Okay. So I encourage people to follow you and get a feel for what Joseph does with you could get some free
So Dale, tell
sign up.
me, what do you think about gold?
It's a roaring bull, but I agree with you that it's going to come off with risk. I think a lot of people look at it as a risk off trade, but
Yeah,
I think we'll get a pullback. I think we could have pullback in silver too.
yeah.
So, and I think that the whole world is looking for 95 in the Dixie. And when everyone's looking for one thing, I actually bought the dollar today. I don't know what it's good for, but it could be a surprise, and we could get a rally back to 102 and then collapse again. So that would play into the narrative of a pretty good correction in the stock market if we had a dollar rally from, 500 points from here.
Yeah, that'd be a big surprise, I think, for the market.
I'd be looking for reasons to get short bonds for new lows. I don't have
Yeah.
any yet. So that's where I'm at. Do you want to open an account with me or get into my hedge fund? I know you're self-directed. I would definitely jump into yours, but Joseph, I really appreciate all the time that you come in here for how long you've been coming in, and you're always transparent about when things are difficult. And I really like your stance here because you're definitely a contrarian voice right now in front of the Fed, and it's great for people in the financial realm to have balance and keep an open mind and look at both sides of the argument. And I agree with you, so we both should be nervous.
Oh no. All right. Well, we'll find out soon.
But I want to thank you for coming in and edifying our community every quarter. So, Joseph, I always look forward to talking to you.
Thanks, Dale. My pleasure.
So, so subscribe everyone, and follow Joseph on his YouTube channel. He does a great weekly update as well every Saturday. And why not, when you want to know about the Fed, listen to someone who spent some time there and was willing to not just sit back and collect a nice guaranteed salary, but struck out into his own to speculate and teach. So lots of respect, Joseph. Thank you, buddy.
Thanks, Dale.
All right. So wrapped up a little early, guys, but have a good turnaround Tuesday. We'll see you tomorrow for uh, the big the big kahuna. Well, Moses will come down from the mountain tomorrow, and we'll check it out and be careful with risk. Um, pay attention to what Joseph says, and I think it's reasonable. So remember, most of all, though, don't just count your pips, count your blessings. Trade safely. There's no law that you have to be in the market before the Fed or the presser. You could always just wait for the dust to settle and react to the reaction. And everyone have a great day. Adios. You're very welcome. People are thanking you, Joseph. So great interview. Big A tomorrow, Will. Okay. I'll see you guys tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.